Hello, viewers. Welcome to this video class. I am Madhu Chetan. In this video class, let's have some discussion on uses and limitations of fund flow statements, and also let's see the current items and non-current items which affects in preparation of fund flow statement. So the first, let's see the importance or uses of fund flow statements. The first use or the important is fund flow statement are prepared for financial analysis in order to meet the needs of people serving the organization. Fund flow statement are prepared for financial analysis in order to meet the needs of people serving in the organization. Means the stakeholders and the shareholders, they need to know the financial transactions which are taking place in the organization and how those transactions are taking place. So they are the stakeholders and shareholders to fulfill their needs, maybe to invest in the organization, maybe to continue their investment, maybe to disinvestment, maybe to invest more in the share capital of the organization. They may show some interest. So for that purpose, the fund flow statements are prepared for financial analysis. Second one, it highlights the different sources and application of sources of funds between two accounting period. So it shows the sources of fund and application of funds not only for the first year, not only for the 1 year. Actually, it shows the sources and application of funds of different 2 years. It brings into light about financial strength and weakness of a concern. So after preparing the fund flow statement, after analyzing, after observing the fund flow statement of any organization, the shareholders and stakeholders can see the company's financial strength and weaknesses of the organization. It acts, next one, it acts as a effective tool to measure the causes of changes in working capital. Since the fund flow statement is prepared to know the reason for changes in working capital, so it acts as an effective tool to measure the causes of changes in working capital. Moving to the next points, it helps the management to take corrective actions while deviations between two balance sheet figure. So the main purpose of preparing financial fund flow statement is to take decision. For decision making purpose, the fund flow statement is prepared. So it helps the management to take the correct decisions based on this. Moving to the next point, it is an instrument used by the investors for effective decision at the time of their investment proposal. So at the time of investment, if any investor wants to make investments, what they can do, they see the fund flow statement and take decisions by observing the fund flow statement and seeing the strengths and weaknesses, the financial strengths and weaknesses of the firm. They can take the decisions. It also presents detailed information about profitability, operational efficiency, and financial affairs of a concern. So, a fund flow statement consists profitability of the organization, operational efficiency, and financial affairs of the concern. So, by seeing these three, the management, the investors can take the decisions. Maybe the management can take the decisions to how to improve the profitability, how to improve the operational efficiency and financial affairs of the concern, and the investors can take the decisions by analyzing the financial statement, by seeing the fund flow statement, whether to continue their investment or disinvestment or make any new investments like this. Next point, it serves as a guide to the management to formulate its dividend policy, retention policy, and investment policy, etc. Since the fund flow statements are prepared to know the causes of changes in funds, so with that they can make the decisions, like they can formulate the decision of policies like dividend policy, retention policy, and investment policies, and so on, etc. It helps to evaluate the financial consequences of business transactions involved in operational finance and investments. If there is any weaknesses, if there is any financial consequences, so that can be look into future, that can be evaluated, that can be seen, that can be what concentrated to take some decisions on that. Next point, it gives the detailed explanation about movement of funds from different sources or uses of funds during a particular accounting period. So of course it gives a detailed explanations about the movement of funds, how the funds are changed, why it is increased, why it is decreased, where the fund is utilized. So with this, these informations are obtained, can be obtained from fund flow statements. Now moving to the limitations or drawbacks of funds flow statement. So like other financial statements, the fund flow statements also suffer from its own fund flow limitations or drawbacks. So they are like this. Funds flow statement does not contain the past information, which may be a vital information to take quality decision at a time. So to take a decision, if a investor or management needs more information, more number of years information, so it is not available in the fund flow statement. It contains the information of only 2 years. The current year's fund flow statement is used for current year only and not useful for future operation and decision making purpose also. So the decision taken, the management takes decision for that current period only when the fund flow statement is prepared. So the fund flow statement applies, the decision taken applies for that current period only. Maybe it may be used for future purpose, but the purpose is for current year only. It fails to reveal continuous changes. Yes, the fund flow statement fails to reveal the continuous, if any changes happening continuously, so it fails to reveal that continuous changes. Why that continuous changes is happening? It doesn't reveal these reasons. The accuracy and liability of funds flow statement is fully depending upon the financial statements. Yes, of course. The accuracy and the reliability. The accuracy and the reliability is mainly depending upon the financial statements. How the financial statement is prepared. If there is any window dressed financial statements, then the accuracy and reliability of the fund flow statement will be less. If there is a accurate and reliable, if there is an accurate financial statement is prepared, then we can say the fund flow statement is accurate. Otherwise, it's not. The next point, it is not a substitute. It is not a substitute of profit and loss account. Yes, of course, it is not a substitute for profit and loss account. It doesn't show profit and loss. Actually, it shows the changes of funds and balance sheet. It provides only additional information. So it is prepared for only for additional information, not for a particular reason. To know the profit and loss account, to know the financial statement, we prepare trading and profit and loss account and balance sheet. So fund flow statement is not prepared to know the profit and loss, not prepared to know the financial statement. It shows only either increase in working capital or decrease in working capital. Yes, fund flow statement shows whether there is a increase in working capital or decrease in working capital between 2 years. But the effect of transactions between current assets and current liabilities are not included in the funds flow statement. Okay, next point, funds for statement is not an original statement. It is only a systematic rearrangement of accounting data given in financial statements. So it is not actually a original statement. It is prepared with the help of other financial statements. It is not a primarily prepared. Actually, it is prepared with the help of other means fund trading and P&L accounts, profit and loss trading and profit and loss account, and balance sheets of 2 years. With that, fund flow statement is prepared. That's why it is not called as an original statement. Okay. Next, does not it does not provide information about changes in cash, which are more important and relevant than working capital. Yes, of course, the fund flow statement does not provide any information about the changes in cash position, which are more important in the organization and relevant than the working capital. Now, let's see the items which comes under current accounts. Some of the current liabilities and current assets. Let's see what are all the current assets. The list of current accounts and non-current accounts are given here. Out of that, let's see what are all the current accounts. So in current accounts, as we know, current assets and current liabilities are there. So current liabilities are bills payable, sundry creditors, outstanding expenses, dividends payable, bank overdraft, short-term loans, provisions against current assets, provision for taxation, maybe current or non-current liability. So provision for tax and proposed dividend. Sometimes it is treated as current liability and sometimes it is not treated as non-current liability. That will be discussed in some authors. Actually, some authors treat the provision for taxation and proposed dividend as a current liability, and some authors does not treat as non-current liabilities. And current assets, if you see the current assets, cash in hand, cash at bank, bills receivable, sundry debtors, short term investments, marketable securities, stock of raw materials, work in progress, and finished goods. Means stock of raw materials, stock of work in progress, and stock of finished goods. Prepaid expenses, accrued incomes are current assets. In current liabilities, I would like to put stress on provision for taxation and proposed dividend. As I told you before, sometimes the provision for taxation and proposed dividend are treated as current liability, and sometimes it doesn't treated as current liability. So some authors treat them as current liability, and some authors don't treat them as current liability. So at the time of preparation of fund flow statement, we have to see, sometimes if it is asked, if it is clearly given in the problem, so the proposed dividend and provision for taxation are to be treated as current liability, then it should be treated as current liability. If it is not given, then it depends on our assumption. Now we have to write the note. If it is treated as current liability, we have to write the note, like note, the provision for taxation is treated as current liability, the provision for taxation is not treated as current liability, like that. Now let's see the non-current accounts, which are permanent liabilities. So non-current accounts are equity share capital, preference share capital, debentures, long-term loans, share premium, share forfeited, profit and loss account, opening balance and closing balances, capital reserve, capital redemption reserve, and non-current or permanent assets are goodwill, land and building, plant and machinery, furnitures and fittings, trademarks, patent rights, long-term investments, discount on issue of shares and debentures, preliminary expenses, other deferred expenses. I hope you understood the importance and limitations of fund flow statements, and what are all the current assets, current liabilities, non-current assets, and non-current liabilities in this video class. Thank you for watching this video. Thank you very much. I With this I end this video. Thank you.